Today we're talking about tax deductions for real estate agents. Number one and number two, hire an accountant and hire a bookkeeper. Because guess what? Both of those expenses are tax deductible anyways. But let's dig into the details here. You want to have a separate credit card set up for your personal and for your business so that it's very easy to keep both expenses separately. When you go to purchase your gas or you go to purchase meals and entertainment, you use your business credit card. It makes your bookkeeping process much simpler.
Well, that's easy.
Here's some examples of tax deductible expenses. For sale signs, billboards, open house signs, office supplies, photography, staging, or maybe some lawn care or some minor repairs for one of the listings that you currently have. Lock boxes, of course, your brokerage fees, licensing fees with the governing body, MLS fees, for whichever real estate board that you're a part of, business cards, postcards, feature sheets, Christmas cards, Facebook and Google pay-per-click advertising, as well as any social media management company that you hire to have some of this work done for you. Employees, of course, are tax deductible. Any real estate coaching or training that you invest in, websites that you currently host, contact retention management systems, so CRM systems, cloud storage, like maybe Dropbox or Google Drive if you pay for storage, software systems like Zoom or any other telecommunications software system that you use to support your business is tax deductible. Memberships for networking groups that you're a part of to help meet other people out in the community. Any supplies that you purchase for a Realtor open house. Any company convention or travel related expenses that you use either by plane, boat, train, car, etc. If you're traveling for business, then those expenses and meals associated with those travel expenses are all tax deductible. Entertainment, if you're going out for lunch or coffee or supper with a client or with a potential client, or if you're renting out the box seats at the local hockey game and inviting a group of your clients to show up, those are all entertainment expenses and they are tax deductible. Home office expenses, you've got a percentage of the utilities, property taxes, the mortgage interest, and the fire insurance of your home you can write off as a business expense. Home office furniture, anything you buy for your local home office is also tax deductible. Your cell phone bill and your internet expenses are also tax deductible. Vehicle expenses, you have the fuel that you pay for, the car wash, oil changes, car insurance, and even some depreciation. Now you should technically keep a logbook so that you know exactly how many kilometers that you have dedicated for business versus personal, but you can also use a little bit of a simpler system and budget for it at the end of the year. I always recommend being a little bit more conservative to make sure that you don't get red flagged by the government when you're doing your taxes at the end of the year. You'd be better off to pay a little bit more in taxes than get audited, in my personal opinion, but you're always best off to keep a very accurate logbook. You also have client parties or appreciation events that you might host. Those are all expenses that are tax deductible, and then a certain percentage of the client gifts that you give on a possession date are also tax deductible. Make sure that you set a very good budget. I usually say approximately 30% of your gross commission income should be budgeted for personal expenses, those that I had just mentioned. Then after expenses, what's left is income that you should budget somewhere close to 30% for taxes. Now what's left after that? Keep in mind, by the way, it depends on what tax bracket you're in. So talk to your accountant about what tax bracket you'll probably fall into. But next after that, of course, is your personal expenses. Now you can control that ahead of time to a certain extent. You don't always know exactly how much money you're gonna make over the next 12 months, but you need to set a budget and you need to get into momentum so that you can try to estimate what you're gonna have for expenses in the first year or in the second year in real estate until you know a little better of what you're going to be accomplishing on a year-over-year basis. Always have a running tally for the total gross commissions earned and paid out for the year to date so far. Because if you haven't paid your income tax for the year so far and you've been paid on a certain number of transactions, you can somehow estimate how much money you are going to owe the government as of a to date right now basis. If you know you've made $80,000 so far this year and you haven't budgeted anything yet for taxes, rather you haven't paid anything yet for taxes, you can budget approximately 30% that you still owe the government, so that when you have a big month, you have a bunch of paydays come in, and you still haven't yet paid your taxes, you know that a certain portion of that money that's sitting in your bank account actually belongs to the government. As a matter of fact, you should probably go ahead and do monthly installments and prepay your tax account to the government ahead of time to make sure that you budget for that, or have a separate savings account at your bank to make sure that you allocate that percentage of your income that does not technically belong to you. And then on top of tracking your commissions, you're also gonna wanna track your incoming paydays. So what do you have for current active listings? What do you have for current active buyers? What do you have for current pending transactions that are still conditional upon financing or home inspection? What do you have for deals that have recently removed conditions that are upcoming for possession dates? And then what do you have for possessions that have recently closed that haven't yet been paid out? You need to track all of these things so that you can then go ahead and budget somehow for what you have for incoming gross commission income. And it also helps you budget your time on a daily and weekly basis for how much you need to be involved in lead generation activity to help bring that next transaction if you can't already foresee it coming. Here's a great tax tip. Make sure when you're looking at investing the surplus that you have, whether you invest it back into your business or whether you invest it into hard assets, you need to remember, of course, if you've invested back into your business, that's going to increase your expenses, that's going to decrease your total profit, which also decreases the amount of taxes that you pay, essentially. But if you don't have enough surplus for a down payment on a hard asset, then obviously it's more difficult to purchase. But also, the bank is always going to look at 2 years history when they are pre-qualifying you for a loan. So there's kind of a balance between, yes, you don't want to pay more taxes than you need to, but you also want to show enough profit on a year-over-year basis so that if you need to borrow money, you have financial statements that will support that. Tax tip: if you can get incorporated, definitely do get incorporated. Don't worry about it early on, but if you have a surplus, make sure that you go ahead and get incorporated. It's going to cost you a little bit more on a year-over-year basis for accounting fees, etc. But if you do have a surplus in your account at the end of the year, then it is very likely more affordable for you in terms of tax savings to get incorporated. You can then as well go ahead and invest within your corporation, or maybe within a holding corporation, with that income that you've earned that you haven't paid personal taxes on. If you have an additional surplus after expenses of, let's say, $100,000, well, if you're not incorporated, you just paid personal tax on that additional $100,000. If you are incorporated, that additional $100,000 is only taxed at a smaller bracket within your business, and you can then go ahead and invest that money and have that money earn additional revenue and income for you without paying personal taxes on that total lump sum. Highly recommend getting incorporated if you can. Pay your taxes on time, or even pay your taxes early. I know the thought of it isn't ideal, that you're paying your taxes ahead of time, when you could technically be reinvesting that money, or you could be earning interest on that money. It's sort of dead money. But on the flip side, I would rather do that than fail to account for the money that I owe the government and have a big surprise lump sum payment that I owe the government. And I'll tell you this, the interest that they charge you for late payment on your taxes owed is definitely not favorable. And the feeling that you get when that happens to you is also not favorable. So I highly recommend pay your taxes on time. Don't forget to like, comment, and subscribe. Thank you for watching this video, and we will see you on this video next.